Aloha and welcome to Java. Thank you kindly for joining us again. It is August 21st. It's 2024, Wednesday. Got a lot going on today. Later on today, after the live, we will be having Discord discussion live. If you haven't been in there yet, I'm going to leave another link for joining that. Go into the main chat room. In the description below, you will see the link for that. Now, Axiom Curve has done a lot of work for us putting that together. We've got some pretty interesting things in there. If you would like to stop by and check it out, you'll have an open invite below. So with this, let's go into what's going on today, starting with the markets. Okay, our favored risk indicator, of course, the MMRI at 240.6. So risk pulled back a little bit. We had the markets did soften towards the end of the day, kind of like we were talking about that. It had been advancing again the first couple of days, and now we're going into an almost sell the news event on Friday. So for today and Thursday, depending on any other news that happens, nothing large happens. The general sentiment is right now we've got a continued cooling as of yesterday. We can see the markets, stock market's a bit weaker. We've still got futures slightly in the green, mostly level. So we've got a continued cooling and then a chop into Thursday. So range trade, probably not too significant now. This is not financial advice. It is just the probabilities from what we see. So with the fear greed meter, we see we're up to 45. So in the neutral territory, there's quite a bit of money in here. However, what we're watching is the mix in here. Most of the big money, the institutions, the volume is down. They're sitting on the sidelines and they are sitting in piles of cash. The larger funds, hedge funds, banks have gold, silver, commodities that they're sitting on. So cash and commodities and kind of sitting on the sidelines for right now. So we've got bond traders basically coming in here. They are risk on because they know that the rate cuts are about to happen. Everybody's pretty certain of this. We'll talk about that in a moment. So with these risk indicators that we're looking at, we'll go into the two main elements is the 10-year yield. This is pretty much the benchmark that all traders use. So right now, 3.824, kind of level from yesterday, but we've got the relative strength of the dollar dropped since yesterday. And this is significant, 101.54 right now. That is what gave stocks a little bit of breathing rooms as it was easing up. That allows the stock prices money to flow into it. So we've got cryptocurrencies still hanging around that 60,000 level. So with all of this happening, all of this kind of slight uncertainty, there is a lot of pressure on Powell to say exactly what the market expects him to say. He has to come out and do what is expected, which means a rate cut. The only question is how much. Now, I tend to think quarter point, somewhere between quarter point and half. So as long as he does that, markets will be relatively calm, but I think it's going to be a sell the news event. So we are watching volatility rise. Gold is pulling back a little bit. It's up at all-time highs. Okay, so it's going to be stock specific other than that. For instance, Walmart came out and announced that they sold their entire stake in JD.com. So JD.com is Chinese ADR, basically kind of like Amazon, online retail sales. Okay, so the calendar today, what is it? One event, the minutes of the FOMC meeting. So this is for the last meeting they had. This is not a decision on the rate cuts that we're looking forward to, basically. So all of this, again, focusing people, for the most part, on the treasury yields. So yields are at lows. the price is higher because a lot of investors going into treasuries, basically buying these bonds. It's kind of a safe haven for the return. So why is this? Well, they're mainly looking at the jobs revisions report. And this is because the jobs have been numbers, which are all fake. The reports come out and then they always get revised. They have for the last, I believe it's 9 reports have been revised down, all of them. So now it's just a question of how much they're going to revise them by. Well, it's coming out that it could be revised by as much as 1,000,000 jobs. And that is significant. So the upcoming Bureau of Labor Statistics, BLS, the revisions could reveal US job growth is slower. That would mean more of a push toward rate cuts. So that actually is going to make the market go up more if they're absolutely certain J. Powell is going to cut. So, and daily we're seeing these stories from larger companies, not small companies, even though small sized businesses are getting wiped out. So today it's Southwest Airlines. They're cutting job losses because airport shutdowns, and they're having financial difficulties because they are basically what they call short haul, for shorter flights that uses more fuel and more expensive to run. They can't cut enough costs, so they are really, pun intended, running into headwinds. Okay, so we've got Wednesday, the earnings reports coming out. Target just came out. They're doing quite well, actually, in the retail sector. So that's a good sign for the economy that it's still got some work into it. We're a bit off. So with this, want to talk a little bit more about the basically the dichotomy that is going on and the hypocrisy between a lot of the political moves that are going on right now. So California just came out with basically $300 million home loan plan. Okay, they've opened it up to illegal migrants, not just migrants, but illegal migrants. Over 2,300 first-time home buyers in California. They're basically just putting down 20% of the value of the house. No interest, don't have to pay it back until when they sell the house, they have to get back 20% of the appreciation. So with this, that's why I have this. If any of you remember this movie, I saw it as a child. It's quite funny, but it's called Brewster's Millions. And the whole point of it was that he was to spend, and back then it was worth something, millions of dollars with nothing to show for it. Well, California clearly would be the winner of this because they have spent more than millions. They're into the billions with absolutely nothing to show for all of the taxpayer money that they spent. So they do this on one side, and then we've got basically FHFA taking action against federal home loan banks after banking failures. And what is this on? This is on basically what they're calling risky loans. So punishing the smaller medium banks, and this is how they're going to manipulate the banking crisis that is about to come in. So it's going to be silent, a little more silent in the background. It's going on right now. It's not something we're looking forward to. It's going to continue for a bit. But the smaller medium banks are, as I said before, closing, getting bought, or merging. And many more are still to go. So with this, we've got Barr, and Barr is a Fed president. If you don't know, he's warning about concentrated risk in cybersecurity for banks because they're having issues with some of these platforms. Now, this could be a warning, not so much for banks or going into banks, but more of what might be planned in the future. And I'm saying that word with deliberation because it could be planned. So if you've got your money in the bank, again, please reconsider. Go to cash, but keep it in your possession, except for the bills you need to pay. And with all of this banking information, as well as attacking the smaller mid-sized banks with the basically with these fines and investigations that they're doing, we've got companies like Klarna. Now they are beginning to have the ability to add financial services as well. They're a buy now, pay later company, and it just shows that they can get into this basic subsect of loaning now and banking industry without all of the overhead that the other banks have had to do. So, moving on, I've got a couple of more stories I'd like to go over. The first is data centers. There's so much more room with these. They're building out tremendously. And in this story in particular, there's six larger data centers. They are going into a new area. Basically, they're building up all over. But this is showing where the tech centers will be in the future. So they're going to be used for the central bank digital currency mining as well as artificial intelligence. And who are the largest controllers at the moment? Amazon and Microsoft. They control 56% of the world's cloud service market. This is globally, these two companies. So, with this, we've also got the more silent corporations, if you will, BlackRock, in a deal for a new headquarter office also in Dublin. So, this area is growing. They are creating their co-locations. So they don't have just one, they've got multiple locations. This is what is up and coming around us. It's where things are heading. There will be basically more inflation going on. We've got a bit of instability coming into the stock markets. So as of now, very likely we'll still continue very slow rise today, kind of choppy session, but Friday is the big day. So tomorrow, probably a cooling off as well. We're going to have this discussion again in the Discord, put the link in, and feel free to join us. Anything you'd like to say about this or leave feedback, please say so in the comments. We'll try to answer you, and it also helps the others here. So with this, I wish you all a great trading day, wonderful day in general, and until I see you again, stay free.